Given the price history and forecast for Bitcoin, a cautious short-term strategy appears most appropriate. The recent price trend shows a clear downward movement, with the forecast indicating further decline. The support price at $97,700.59 provides a potential floor, but the forecast suggests a dip below this level. Therefore, a short position would be considered. An entry price around $98,363.61, just above the resistance price, allows for capturing potential downward momentum. A stop loss at $99,000, slightly above the entry price, helps manage risk. The target price could be set at $97,700.59, the support level, aiming to profit from the expected price drop. This strategy focuses on capitalizing on the short-term bearish trend while minimizing potential losses. Based on the provided price information for Bitcoin Cash, a bearish investment strategy is recommended for a short to medium-term perspective. The 2-week price change shows a clear downward trend, and the forecast predicts further declines over the next week. The historical price data also supports this bearish outlook, with prices consistently falling over the past few weeks. Therefore, a short position is advisable to capitalize on this anticipated decline. A suitable entry price would be around $356, aligning with the recent historical low and the forecast's lowest point. The stop loss should be set at $365 to mitigate risk in case of an unexpected price surge. The target price could be set at $320, aiming to profit from the predicted decline while staying above the strong support level of $329.20. This strategy allows for potential profit while managing risk in a potentially volatile market. Based on the provided information for stacks, a short-term bearish investment strategy appears most suitable. The historical price data shows a consistent downward trend over the past 2 weeks, with the forecast predicting further declines. The current price is hovering near the resistance level of $1.32, suggesting a potential for a pullback. Therefore, I recommend taking a short position on stacks with an entry price at $1.25. The stop loss should be set at $1.32 to limit potential losses if the price unexpectedly surges. The target price should be set at $0.6477, which aligns with the support price and represents a significant potential profit. This strategy capitalizes on the anticipated downward momentum while mitigating risk with a well-defined stop loss. Based on the provided Ethereum price data, a cautious investment strategy leaning towards the short term appears most suitable. The historical prices demonstrate a downward trend over the past 2 weeks, culminating in a significant drop to $2,730. The forecast further predicts a continued decline, reaching as low as $2,470 in the coming weeks. This bearish outlook, coupled with the price already nearing the support level of $2,721.87, suggests limited potential for a substantial upward reversal in the short term. Therefore, a short position on Ethereum is recommended. An aggressive short-term strategy could involve an entry price of $2,860, aligning with the current price and the forecasted decline. A stop loss should be placed at $2,950 to mitigate potential losses if the market unexpectedly rebounds. The target price should be set at $2,600, aiming to capitalize on the predicted price drop while leaving room for potential market fluctuations. This strategy prioritizes risk management while capitalizing on the anticipated downward trend in Ethereum. Given the current price trend of Ripple and its forecast, a short-term investment strategy appears to be the most prudent approach. The historical price data reveals a downward trend, and the forecast predicts further declines in the coming week. This bearish outlook suggests that capitalizing on the anticipated price drop would be a more profitable strategy than attempting to ride an upward wave. Therefore, an aggressive short-term strategy would involve opening a short position at the current market price, which is around $2.88. The stop-loss order should be placed at $2.95 to minimize potential losses if the price unexpectedly surges. The target price would be set at $2.50, anticipating a significant decline towards the support level. This strategy aims to capitalize on the anticipated downward momentum while managing risk effectively. Based on the provided price history and forecast for Binance Coin, a short-term bearish strategy appears most suitable. The historical data reveals a consistent downward trend, with the price currently hovering near its lowest point in recent history. The forecast further suggests a continued decline in price over the next week, reaching as low as $513. This indicates a strong likelihood of further price drops in the short term. Given this bearish outlook, a short position on Binance Coin is recommended. An entry price of $617, aligned with the current price, would be appropriate. To mitigate potential risk, a stop loss should be set at $652, slightly above the recent high point, ensuring protection against any unexpected price surges. The target price should be set at $572, aiming to capture a significant portion of the anticipated decline. This strategy capitalizes on the prevailing bearish momentum and aims to generate profits from the expected price drop in Binance Coin. Based on the provided information for Stellar, a cautious investment strategy is recommended due to the downward trend in both historical prices and the forecast. The historical price data shows a consistent decline over the past 2 weeks, with the most recent price points hovering near the lower end of the recent range. The forecast further reinforces this bearish outlook, projecting continued price decreases over the coming week. Considering these factors, a short position appears to be the most suitable approach. An entry price of $0.395, aligned with the current price and near the resistance level, would be a strategic starting point. A stop-loss order set at $0.413, slightly above the recent high, would help mitigate potential losses if the price unexpectedly rebounds. The target price should be set at $0.349, which aligns with the lowest predicted price in the forecast, allowing for potential profits while minimizing risk. This strategy aims to capitalize on the anticipated downward momentum of Stellar while managing risk through a well-defined stop loss and a conservative target price. Based on the provided Toncoin price information, a short-term bearish strategy is recommended. The 2-week price change demonstrates a downward trend, and the forecast predicts further declines. The historical prices show a consistent downward trajectory, with the current price hovering near its lowest point in recent history. The forecast suggests Toncoin could drop from its current level to as low as $3.16 in the coming weeks. This bearish outlook, coupled with the lack of clear support levels, indicates a high probability of further price depreciation. Therefore, a short position is advisable to capitalize on this anticipated decline. An aggressive entry price could be around $4.08, aligning with the current price and the first forecasted price. A stop-loss order should be set at $4.20 to minimize potential losses if the price unexpectedly rises. The target price could be set at $3.50, allowing for a reasonable profit margin before the market potentially reaches its forecasted lowest point. This strategy focuses on capitalizing on the short-term downward momentum of Toncoin and aims to mitigate risk through a well-defined stop-loss order. Based on the provided Cardano price information, a cautious short-term investment strategy is recommended. The historical price data reveals a downward trend over the past 2 weeks, with the forecast indicating further declines in the coming week. The support price of $0.3638 suggests a potential floor for the price, while the resistance at $0.883 indicates a significant barrier to upward movement. Considering these factors, a short position would be more suitable. An ideal entry price for this strategy would be $0.814, aligning with the recent price action and the forecast. A stop-loss order should be placed at $0.883, above the current price and the resistance level, to protect against unexpected upward movements. The target price should be set at $0.3638, aiming to capitalize on the anticipated decline towards the support level. This strategy prioritizes risk management while aiming to profit from the bearish sentiment surrounding Cardano in the short term. Based on the provided information for Litecoin, a cautious investment strategy with a medium-term perspective is recommended. The historical price data shows a volatile trend with recent dips, indicating potential for further decline in the short term. The forecast price also suggests a downward trend over the next week, reaching as low as $92. However, the support price at $73.99 suggests a potential floor for the price, indicating that further significant drops are unlikely. Therefore, a long position is not recommended at this time. A short position could be considered with an entry price around $107, aligning with the forecast and recent price action. The stop loss should be set at $113.71, the resistance level, to limit potential losses if the price unexpectedly surges. The target price could be set at $75, aiming to capitalize on the anticipated decline towards the support level while leaving room for potential price fluctuations. This medium-term strategy allows for potential profits while mitigating risks associated with the volatile nature of Litecoin. Based on the provided information about Swaycoin, a conservative investment strategy would be to take a short-term position. The 2-week price change shows a downward trend, and the forecast indicates further declines. While the support price at $3.2645 provides a potential floor, the resistance at $3.6522 suggests limited upside potential. Therefore, a short position appears more promising. An ideal entry price for this strategy would be $3.59, slightly above the current price, allowing for a small margin of safety. The stop loss should be set at $3.69, just above the recent high, to minimize potential losses. The target price could be set at $3.26, aligning with the support level and offering a reasonable profit margin. This short-term strategy capitalizes on the anticipated price decline while mitigating risk through a well-defined stop loss. Based on the provided Aptos data, a short-term bearish strategy seems most appropriate. The historical price data reveals a downward trend, and the forecast predicts further declines over the next week. This suggests a high probability of the price falling below the current level. The support price at $5.70 acts as a potential floor for the price, while the resistance at $6.30 presents a significant barrier to upward movement. Therefore, an aggressive short-term investment strategy could involve entering a short position at the current price, around $6.08, with a stop-loss order placed slightly above the recent high at $6.30. The target price should be set at $5.70, aiming to capture the potential downside movement before the price potentially finds support at that level. This strategy capitalizes on the anticipated decline while minimizing risk through a well-defined stop-loss mechanism. Given the price trends and forecast for SE, a conservative investment strategy would focus on a short-term approach to manage risk. The historical prices show a consistent downward trend, with the current price near the support level of $0.1459. The forecast suggests SE could drop further, reaching as low as 18 cents. This indicates a bearish outlook in the short term, making a short position the most suitable strategy to capitalize on the anticipated decline in prices. Therefore, an aggressive short-term investment strategy would involve entering a short position at $0.257, aligning with the recent price action. The stop loss should be set at $0.2657 to protect against any unexpected price recovery. The target price should be set at 18 cents, slightly above the forecasted lowest price, allowing you to take profits before the market hits major support at $0.1459. Given the Ethereum Classic price history and forecast, a cautious investment strategy focusing on the short term seems most appropriate. The 2-week price change shows a downward trend, and the forecast predicts further declines. While the support price is at $19.66, the forecast suggests prices could drop to $17. Therefore, a short position on Ethereum Classic is recommended. To implement this strategy, enter a short position at $22, a price point above the current price but below the forecast lows. Set the stop loss at $23 to protect against unexpected price increases. The target price should be set at $19.50, aiming to capture potential downside momentum before reaching the support level. Given the price trends and forecast for Polygon, a conservative investment strategy would focus on a short-term approach to capitalize on potential price fluctuations. The historical prices show a downward trend, with the forecast indicating further declines. The support price is at $0.292, which represents a potential floor for the price. The resistance level is at $0.321, suggesting limited upward potential. Therefore, a short position is recommended to capitalize on the anticipated decline in prices. An entry price of $0.315, slightly above the current price and below the resistance level, would be suitable. The stop loss should be set at $0.325 to limit potential losses if the price unexpectedly rises. The target price should be set at $0.295, aiming to capture a portion of the predicted decline before reaching the support level. This strategy allows for potential profit while mitigating risk through a well-defined stop loss. Based on the provided price information for AEVO, a bearish investment strategy is recommended. The historical price data shows a clear downward trend, and the forecast predicts further declines in the coming weeks. The price has fallen significantly from its peak, and there are no clear signs of a reversal. The historical price data indicates a consistent downward trend, with the recent price drop particularly pronounced. The forecast prices further reinforce this bearish outlook, suggesting a continued decline in the coming weeks. Considering these factors, an investment strategy focused on shorting AEVO appears most appropriate. A suitable entry point would be around $0.189, aligning with the recent price action and the lowest forecast price. The stop loss should be set slightly above the entry price at $0.195 to limit potential losses. The target price could be set at $0.154 based on the forecast, allowing for a significant profit potential while managing risk. This strategy capitalizes on the anticipated downward price movement and aims to generate returns in a declining market. Given the price trends and forecast for optimism, a conservative investment strategy would focus on a short-term approach to capitalize on the anticipated price decline. The historical prices show a clear downward trend, with the current price hovering near its lowest point in recent weeks. The forecast suggests optimism could continue to decline, reaching as low as $0.862 in the coming weeks. While the support price sits at $1.099, indicating a potential floor for the price, the bearish outlook and the proximity to the support level suggest a high probability of further downward movement. Therefore, a short position is advisable to take advantage of this potential decline. An entry price of $1.18, slightly above the current price, allows for a small margin of safety. The stop loss should be set at $1.25 to limit potential losses if the price unexpectedly rebounds. The target price should be set at $1.05, aiming to capture a significant portion of the anticipated decline. This strategy allows for a measured approach to capitalize on the bearish trend while minimizing risk. Based on the provided information for STRK, a cautious investment strategy would be most appropriate. The 2-week price change reveals a clear downward trend, with the forecast predicting further declines over the next week. The historical prices show a significant drop, suggesting a potential continuation of this bearish momentum. Therefore, a short position is recommended to capitalize on the anticipated price decrease. An entry price of $0.272 aligns with the current price and the forecasted decline. A stop loss should be set at $0.285, slightly above the current price, to limit potential losses in case of an unexpected price surge. The target price could be set at 24 cents, a conservative level that allows for profit-taking before reaching the lower bounds of the predicted range. This strategy prioritizes risk management and aims to profit from the prevailing bearish sentiment in the short term. Given the price trends and forecast for Solana, a cautious investment strategy would focus on a short-term approach. The historical prices show a downward trend, with the current price close to the forecast and near the support level of $182.86. The resistance is at $219.39, indicating that there is limited room for upward movement in the short term. In this scenario, a short position is advisable to capitalize on the potential for a price decrease towards the support level. For an aggressive short-term investment strategy, an entry price of $210 would be ideal, aligning with the forecasted price. The stop loss should be set at $219, protecting against any unexpected price recovery. The target price should be set at $185, slightly above the support level, allowing you to take profits before the market potentially rebounds. Based on the provided price information for Jupiter, a medium-term investment strategy appears most suitable. The historical price data shows a volatile, but generally upward trend. While the forecast suggests a slight pullback in the short term, it indicates a potential return to an upward trajectory. This suggests a buying opportunity with a medium-term perspective. Therefore, an investment strategy would involve entering a long position at a price slightly above the current support level of $0.9015. A conservative entry price could be around 92 cents, allowing for a buffer against any immediate price fluctuations. The stop loss should be set at 89 cents to limit potential losses. The target price could be set at $1.08, aligning with the historical resistance level and the upward forecast. This strategy aims to capitalize on the expected price appreciation within a medium-term timeframe, offering a balance between risk and potential reward. The analysis of Render's historical price data and the provided forecast indicates a bearish trend in the short term. The 2-week price change shows a consistent downward movement, and the forecast predicts further declines in the coming week. This suggests that a short position could be profitable. Considering the price information, an aggressive short-term investment strategy for Render would involve entering a short position at the current price of around $4.64. The stop loss should be set at $4.771, the resistance price, to limit potential losses if the price unexpectedly rises. The target price could be set at $4.221, the support price, aiming to capitalize on the anticipated price decline. This strategy capitalizes on the current bearish momentum and aims to profit from the potential drop towards the support level. Based on the provided data for Solana name service, a short-term bearish strategy appears to be the most suitable. The historical price data reveals a consistent downward trend, with the price dropping significantly in recent weeks. This trend is further supported by the forecast, which predicts continued declines in the coming week. The support price of $0.1441 indicates a potential floor for the price, while the resistance at $0.215 suggests limited upside potential. Therefore, a short position is recommended, aiming to capitalize on the anticipated price drop. An entry price of $0.195, slightly above the current price, allows for a buffer against potential minor upward fluctuations. The stop loss should be set at $0.205 to mitigate risk if the price unexpectedly surges. The target price is set at $0.144, aiming to capture a significant portion of the predicted decline. This strategy allows for a potentially high return in a relatively short timeframe, aligning with the short-term bearish outlook for Solana name service. Based on the provided Doge-Coin price information, a cautious investment strategy is recommended. The historical price data reveals a clear downward trend, with the recent forecast predicting further declines. Although the support price sits at $0.26421, the forecast suggests Dogecoin could drop to as low as $0.233. This indicates a bearish outlook in the short term, making a short position the most suitable strategy. An aggressive short-term investment strategy could involve entering a short position at $0.285, the current price level. The stop loss should be placed at $0.3189, the resistance price, to limit potential losses if the price unexpectedly rises. The target price should be set at $0.26421, aiming to profit from the anticipated decline towards the support level. This strategy prioritizes risk management while capitalizing on the bearish price momentum. Given the price trends and forecast for PEPE, a cautious investment strategy would focus on a short-term approach to minimize potential losses. The historical prices show a general downward trend, with the current price close to its forecast and near the support level. The resistance is at $0.0000138, indicating that there is limited room for upward movement. In this scenario, a short position is advisable to capitalize on the potential for a price decrease towards the support level. For an aggressive short-term investment strategy, an entry price of $0.0000110 would be ideal, aligning with the forecasted price. The stop loss should be set at $0.0000123 to protect against any unexpected price recovery. The target price should be set at $0.0000091, slightly above the support price, allowing you to take profits before the market hits major support. Given the price trends and forecast for SHIB Inu, a cautious investment strategy would focus on a short-term approach. The historical prices show a downward trend, with the current price near the support level of $0.0000153. The forecast suggests SHIB Inu could drop further, reaching as low as $0.0000136 in the coming week. This indicates a bearish outlook in the short term. Therefore, a short position is advisable to capitalize on the anticipated decline in prices. An aggressive short-term investment strategy could involve an entry price of $0.0000161, aligning with the first forecasted price. The stop loss should be set at $0.0000168 to protect against any unexpected price recovery. The target price should be set at $0.0000153, slightly above the support level, allowing you to take profits before the market potentially bounces. Remember to carefully manage your risk and consider your investment goals before making any trading decisions. Based on the provided price history and forecast for Dog with Hat, a short-term investment strategy appears most suitable. The historical prices demonstrate a consistent downward trend, and the forecast predicts further declines over the next week. This suggests a bearish outlook for Dog with Hat in the short term. Therefore, an investment strategy involving a short position is recommended. The entry price should be set at $0.918, aligning with the current lowest historical price. The stop loss should be placed at $1.01 to mitigate potential losses if the price unexpectedly rebounds. The target price should be set at $0.776, slightly above the forecasted lowest price, allowing for profit taking before the market potentially reaches major support. This strategy capitalizes on the anticipated price decline while managing risk effectively. Based on the provided price history and forecast for Doge-Coin, a short-term bearish strategy appears to be the most suitable approach. The price history reveals a consistent downward trend, with the most recent data points indicating a further decline. This trend aligns with the forecast, which predicts continued price drops over the next few weeks. The forecast suggests a potential drop from the current price level to around $0.00161, presenting an opportunity for investors to capitalize on this anticipated decline. Given this outlook, a short position on Doge-Coin is recommended for a short-term investment horizon. An entry price around $0.00429, near the recent high point, would allow investors to enter the trade as the price begins to decline. A stop-loss order should be placed at $0.00446, slightly above the entry price, to limit potential losses. The target price could be set at $0.00185, aiming to capture a significant portion of the forecasted price drop. This strategy allows for potential profits while managing risk through a well-defined stop-loss level. Based on the provided price information for NEAR protocol, a conservative investment strategy would be to adopt a short-term outlook. The historical price data reveals a downward trend, and the forecast suggests further declines. The support price at $3.241 serves as a potential floor for the asset, while the resistance at $3.399 indicates limited upward potential. Therefore, a short position is recommended. An entry price of $3.35, slightly above the current price and below the resistance level, allows for a small margin of safety. A stop loss at $3.45 helps mitigate potential losses if the price unexpectedly surges. The target price should be set at $3.15, aiming to capture a portion of the anticipated downward movement. This strategy prioritizes risk management and capital preservation while seeking modest gains in the short term. Based on the provided Internet Computer price history and forecast, a short-term bearish strategy appears to be the most suitable. The historical data shows a fluctuating price trend with a recent downward movement. The forecast further reinforces this bearish sentiment, predicting a continuous decline in price over the next week. This suggests that Internet Computer is likely to experience further downward pressure in the short term. Therefore, an investment strategy involving a short position is recommended. A suitable entry price would be around $7.37, aligning with the lowest forecasted price. The stop loss should be set at $7.66, slightly above the current price, to minimize potential losses if the price unexpectedly rebounds. The target price could be set at $6.826, the identified support price, aiming to capture a significant portion of the anticipated price decline. This strategy capitalizes on the short-term bearish outlook for Internet Computer while managing risk effectively. Based on the provided price information for Injective, a cautious short-term investment strategy is recommended. The historical price data reveals a downward trend over the past 2 weeks, with the forecast predicting further declines. Although the support price is at $14.148, the forecast suggests prices could fall to $11, indicating a high likelihood of the price reaching or even breaking through the support level. Therefore, a short position is advisable. An entry price of $15.41, just above the resistance price, allows for a potential profit as the price moves downwards. The stop loss should be set at $16 to minimize risk in case of an unexpected price surge. The target price should be set at $14.148, aligning with the support price, ensuring a reasonable return while mitigating potential losses. This strategy focuses on capitalizing on the anticipated price decline while minimizing risk through a well-defined stop loss. Given the price trends and forecast for BTC, a cautious investment strategy would focus on a short-term approach. The historical prices show a volatile trend, with recent declines and a forecast indicating further potential drops. The support price at $344.1 serves as a potential floor for the asset, while the resistance at $417.80 suggests limited upside potential in the near term. This indicates a bearish outlook in the short term, making a short position the most suitable strategy to capitalize on the anticipated decline in prices. For an aggressive short-term investment strategy, an entry price of $390 would be ideal, aligning with the recent price action and the forecasted price. The stop loss should be set at $400 to protect against any unexpected price recovery. The target price should be set at $345, slightly above the support price, allowing you to take profits before the market hits major support. This strategy aims to capitalize on the anticipated short-term price decline while mitigating potential risks. Based on the provided historical price data and the one-week forecast for THETA network, a short-term bearish strategy appears to be the most suitable. The 2-week price change reveals a consistent downward trend, and the forecast predicts further declines. The historical price data shows a gradual decline over the past few weeks, with the price currently hovering near the support level of $1.296. The forecast suggests a potential drop to $1.17 within the next week, indicating a bearish outlook in the short term. Therefore, an investment strategy for THETA network would involve taking a short position. An entry price of $1.52, aligned with the current price, would be appropriate. To manage risk, a stop loss should be set at $1.57, slightly above the current price, to protect against any unexpected upward movements. The target price should be set at $1.296, aiming to capture the potential decline towards the support level. This strategy capitalizes on the anticipated bearish momentum while mitigating potential losses through a well-defined stop-loss order. Given the provided price information for WorldCoin, the historical data shows a clear downward trend. The forecast prices further reinforce this bearish outlook, suggesting continued price decline over the next week. The current price is close to the support price of $1.067, indicating a potential bounce. However, the resistance level at $1.468 is significantly high, suggesting a significant barrier for an upward price movement. Therefore, a short-term bearish investment strategy is recommended. An entry price of $1.36, slightly above the current price, allows for some room for a potential bounce before entering a short position. The stop loss should be placed at $1.42 to limit potential losses if the price unexpectedly moves higher. The target price is set at $1.07, aiming to capitalize on the anticipated price decline towards the support level. This strategy allows for potential profits while managing risk effectively in line with the bearish outlook for WorldCoin. Based on the provided price history and forecast for Hooked Protocol, a short-term bearish investment strategy is recommended. The historical price data shows a consistent downward trend over the past 2 weeks, with the forecast indicating further declines. The price is currently near its lowest point in the recent history, and the forecast suggests it could fall to as low as $0.124. This indicates a high probability of continued downward pressure in the short term. Therefore, a short position on Hooked Protocol is advisable. An ideal entry price would be $0.212, aligning with the current price and the start of the predicted decline. The stop loss should be set at $0.254, slightly above the recent high, to limit potential losses if the price unexpectedly rebounds. The target price should be $0.146, a conservative target based on the forecast, allowing for some profit margin before the price potentially reaches its lowest predicted point. Based on the provided Artificial Superintelligence Alliance price history and forecast, a short-term bearish investment strategy appears most suitable. The historical price data reveals a consistent downward trend, with the forecast projecting further declines over the next week. The current price is hovering near the resistance level of $0.914, suggesting a potential for a pullback. Therefore, an aggressive short-term strategy would involve taking a short position at the entry price of $0.900. The stop loss should be placed at $0.950 to limit potential losses if the price unexpectedly rises. The target price should be set at $0.750, aligning with the forecast's lowest price prediction, allowing for profit taking before the market potentially reaches the support level of $0.7074. Polkadot's recent price history shows a downward trend, with the forecast indicating further declines in the coming week. The price is currently below the support level, suggesting a weak bullish sentiment. Considering the bearish outlook and the forecast price trajectory, a short position on Polkadot appears to be the most suitable strategy. To implement this strategy, an entry price of $5.20 could be considered, aligning with the current price and allowing for potential profit as the price drops towards the forecast lows. A stop loss should be placed at $5.40 to limit potential losses if the price unexpectedly rebounds. The target price could be set at $4.50, aiming to capitalize on the anticipated decline while staying above the support level of $4.177. This strategy aims to capitalize on the short-term bearish momentum in Polkadot. Given the provided price history and forecast for Filecoin, a cautious short-term investment strategy appears most suitable. The historical price data reveals a downward trend, with the recent price hovering near its lowest point in the past 2 weeks. The forecast further reinforces this bearish sentiment, predicting a continued decline in price over the next week. Considering this outlook, a short position on Filecoin is recommended. An entry price around $3.54, the current lowest point in the history data, allows for capturing potential downside movement. The stop loss should be set slightly above the entry price at $3.58, the first forecast price, to minimize risk. The target price should be set at $3.278, the support price, aiming to capitalize on the predicted price decline while avoiding excessive risk. This strategy prioritizes risk management and seeks to profit from the anticipated downward trend in Filecoin's price. Based on the provided Conflux price information, a cautious investment strategy is recommended. The historical price data reveals a downward trend, with the current price significantly below the recent highs. The forecast further suggests continued decline, reaching as low as $0.0895 in the coming weeks. This bearish outlook indicates that a short position would be more suitable than a long position. An ideal entry point for a short position would be around $0.126, aligning with the current price and allowing for potential profit if the forecast unfolds. A stop loss could be set at $0.141, the highest point in the recent price history, to limit potential losses. The target price should be set conservatively around $0.0987, the lowest point projected by the forecast, allowing for a moderate return while mitigating risk. This strategy emphasizes risk management and capital preservation, aiming to profit from the anticipated price decline in conflux. Based on the provided price history and forecast for Ethereum name service, a cautious investment strategy with a short-term perspective appears most suitable. The historical price data reveals a downward trend over the past 2 weeks, and the forecast predicts further declines in the coming week. The current price is situated close to the support level of $17.32, suggesting that a further drop is likely. Therefore, a short position on Ethereum name service is recommended. An entry price of $29 would allow you to capitalize on the anticipated price decline. To manage risk, a stop-loss order should be placed at $30.82, the resistance level, to limit potential losses if the price unexpectedly rises. The target price should be set at $27, aiming to profit from the projected drop towards the support level. This strategy prioritizes risk management and capitalizes on the bearish outlook for Ethereum name service in the short term. Given the 2-week price change and 1-week forecast for Avalanche, a cautious investment strategy is recommended. The historical price data reveals a downward trend, with the forecast suggesting further declines. The support price at $24.99 indicates a potential floor for the price, while the resistance at $27.07 suggests an unlikely upward break in the near future. Therefore, a short position is advisable to capitalize on the anticipated price decrease. An entry price of $26.50, aligning with the current price and the upper end of the recent price range, is recommended. The stop loss should be set at $27.07, slightly above the resistance level, to minimize potential losses if the price unexpectedly rises. The target price should be set at $24.99, aiming to capture the potential price drop towards the support level. This strategy prioritizes risk management and seeks to profit from the prevailing bearish sentiment in the Avalanche market. Given the price trends and forecast for Bitcoin, a cautious investment strategy would focus on a short-term approach. The historical prices show a consistent downward trend, with the current price hovering near the support level of $0.02422. The forecast suggests Bitcoin could drop further, reaching as low as $0.0317 in the coming week. This indicates a bearish outlook in the short term, making a short position the most suitable strategy to capitalize on the anticipated decline in prices. For an aggressive short-term investment strategy, an entry price of $0.0436 would be ideal, aligning with the current price and the forecasted decline. The stop loss should be set at $0.0467 to protect against any unexpected price recovery. The target price should be set at $0.0372, slightly above the forecasted lowest price, allowing you to take profits before the market hits major support at $0.02422. This strategy aims to capture a potential short-term price decline in Bitcoin. Based on the provided price information for PENDLE, a cautious investment strategy leaning towards the short side appears most prudent. The 2-week price history reveals a fluctuating trend with a downward bias, culminating in a significant drop in recent days. The forecast price further reinforces this bearish outlook, projecting continued decline over the next week. Considering these factors, a short position on PENDLE at the entry price of $2.82 would be advisable. The stop loss should be set at $3.09 to limit potential losses if the price unexpectedly rebounds. The target price, aiming for a conservative profit, could be set at $2.62, aligning with the identified support level and reflecting the anticipated downward movement. This strategy prioritizes risk management while capitalizing on the prevailing bearish sentiment surrounding PENDLE. Given the historical price data for the sandbox and the provided forecast, a cautious investment strategy focusing on the short term appears most suitable. The historical prices show a downward trend, with the forecast predicting further declines. The support price at $0.2435 suggests a potential floor for the price, while the resistance at $0.5463 indicates a significant barrier to upward movement. Therefore, a short position is recommended to capitalize on the anticipated price decline. An aggressive entry price would be $0.487, aligning with the recent price action and the forecast. The stop loss should be set at $0.512 to protect against any unexpected upward movement. The target price should be set at $0.348, slightly above the forecasted lowest price, allowing for profit taking before the market potentially finds support at the $0.2435 level. Given the downward trend in Decentraland's historical prices and the bearish forecast suggesting further declines, a short-term investment strategy focusing on a short position seems appropriate. The entry price should be around $0.354, aligning with the forecasted lowest price. Setting a stop loss at $0.3874, slightly above the current price, protects against unexpected upward movements. The target price should be set at $0.2874, the support price, aiming to capitalize on the anticipated price decline. This strategy leverages the potential for Decentraland to fall towards its support level, capitalizing on the bearish sentiment indicated by both historical price data and the forecast. The short-term nature of this investment allows for quick entry and exit, aiming to maximize profits from the anticipated price drop while minimizing potential losses through a well-defined stop loss. Based on the provided price information for ENG coin, the historical data reveals a clear downtrend over the past 2 weeks. The forecast further reinforces this bearish outlook, predicting continued price declines over the next week. Considering this trend and the forecast, an investment strategy focusing on a short position appears most suitable. To implement this strategy, a suitable entry price would be 12 cents, aligning with the recent price action and providing a margin of safety. A stop-loss order should be placed at $0.126 to mitigate potential losses if the price unexpectedly rebounds. The target price could be set at $0.0937, representing a conservative estimate based on the forecast, allowing for potential profit before the price potentially reaches further lows. This short-term investment strategy aims to capitalize on the anticipated price decline in ENG coin. Given the provided price history and forecast for Uniswap, a cautious approach with a short-term investment perspective appears most suitable. The historical price data reveals a downward trend, with the forecast indicating further declines in the coming weeks. The price is currently near the support level of $9.06, suggesting a potential for a short-term bounce. However, the forecast suggests a continued downward trajectory, making a short position potentially more profitable. Therefore, an investment strategy could involve entering a short position at the current price of $9.06. The stop loss should be set at $9.61, slightly above the current price and the highest forecast price, to limit potential losses. The target price could be set at $8.146, the support level, aiming to capitalize on the anticipated price decline. This strategy aims to take advantage of the short-term price movement while minimizing risk by setting a stop loss. Given the 2-week price change and 1-week forecast for Chainlink, a short-term bearish strategy is recommended. The historical price data shows a downward trend, with the recent price hovering around $20. The forecast predicts a further decline, potentially reaching as low as $18. This suggests that the price might continue to drop in the short term. Therefore, an aggressive short-term investment strategy would involve taking a short position on Chainlink. A suitable entry price would be $21, with a stop loss set at $22 to limit potential losses. The target price should be $19, aiming to capture potential profits from the anticipated price decline. This strategy capitalizes on the bearish momentum indicated by both the historical price data and the forecast, seeking to profit from the potential further drop in Chainlink's price. Given the historical price trends and the provided forecast for Aave, a cautious investment strategy would be advisable. The 2-week price change demonstrates a downward trend, with the forecast suggesting further declines in the coming week. While the support price at $254.18 provides a potential floor, the resistance level at $284.03 is far away, indicating limited upward potential in the short term. Considering these factors, a short position on Aave appears to be more suitable. An entry price around $275 could be considered, slightly above the current price, allowing for some room for potential price fluctuations. A stop-loss order should be placed at $284.03, the resistance level, to limit potential losses if the price unexpectedly rises. The target price could be set at $254.18, the support level, aiming to capitalize on the anticipated downward movement. This strategy focuses on a short-term investment horizon, capitalizing on the expected price decline within the next week. Given the historical price fluctuations of EOS and the bearish forecast, a short-term investment strategy focusing on a short position seems most suitable. The price has been steadily declining, and the forecast predicts further drops in the coming week. The entry price for this strategy should be around 65 cents, aligning with the current price trend and the forecast. To manage risk, a stop-loss order should be placed at 67 cents, slightly above the entry price to avoid immediate losses if the price unexpectedly surges. The target price for this short position is set at 55 cents, aiming to capture potential profits as the price moves towards the support level. This strategy capitalizes on the bearish sentiment and aims to generate returns within a short time frame. Based on the provided Tron data, the current price trend appears bearish. The 2-week price history shows a downward movement, with the forecast indicating further declines over the next week. The price is currently near the resistance level of $0.2444, suggesting a potential for further downward pressure. Considering this bearish outlook and the forecast, a short-term investment strategy focusing on a short position seems more appropriate. An aggressive short-term strategy could involve entering a short position at the current market price, around $0.244. The stop loss should be placed above the recent resistance level, at $0.2444, to minimize potential losses if the price unexpectedly rebounds. The target price could be set at $0.225, aligning with the predicted lowest price point in the forecast. This strategy aims to capitalize on the anticipated price decline while managing risk through a defined stop loss. Given the price trends and forecast for Suncoin, a cautious investment strategy would focus on a short-term approach. The historical prices show a consistent downward trend, with the current price close to its forecast and near the support level of $0.01725. The resistance is at $0.01886, indicating that there is limited room for upward movement. In this scenario, a short position is advisable to capitalize on the potential for a price decrease towards the support level. For a cautious short-term investment strategy, an entry price of $0.0185 would be ideal, slightly above the current price and near the resistance level. The stop loss should be set at $0.0190 to protect against any unexpected price recovery. The target price should be set at $0.0170, below the support level, allowing you to take profits before the market hits major support at $0.01725. This strategy aims to minimize risk while potentially profiting from the anticipated decline in prices.